All right, y'all. Welcome to the next session of the trading course. And in this session, we are going to be going over Fibonacci. Fibonacci retracements, Fibonacci extensions, obtaining targets, how to set stop losses and take profit levels using these Fibonacci numbers. Now, who is Fibonacci? He is a mathematician. Leonardo Fibonacci da Pisa is a 13th century mathematician who discovered the Fibonacci sequence. And essentially, this sequence starts with 0, and then it adds 1, which gives us the first two numbers. So we have 0, and then we add 1, which gives us the number 1. Okay? 0, add 1, we get number 1 for the third number. Then we do 1 plus 1 equals 2. And then we just keep adding the previous number to the current number. So 1 plus 2 equals 3. 2 plus 3 equals 5. 3 plus 5 equals 8. 5 plus 8 equals 13. 8 plus 13 equals 21. So on and so forth. Now this ratio, these numbers, they show up everywhere in the creation. They're absolutely everywhere. Animals, flowers, the orbiting of the heavenly bodies, and all these things. But what's important for us is we can use them to find bounces if price is dipping. We can use them to set targets if price is bouncing off a certain area. How are we going to know where it's going to go? We can use Fibonacci. So what are retracements? What is a retracement? A retracement is a short-term price correction during an overall larger trend. This can be true in an uptrend or a downtrend. The way trends work is price is never just going to go straight up. Price is never just going to go like this, right? Instead, it's going to go up a little, and then it's going to retrace. The retracement is a price correction during an overall larger trend. So when we're coming down like this is not a downtrend. This is still an uptrend, but it's a retracement. And then we come up a lot, and then we come down a little. That's a retracement. We come up, and then we come down a little. That's a retracement. We come up, and then we come down a little. That is a retracement. And a lot of times when price retraces, we will find that it will go to certain areas, and I'll show you how to find those areas. And when we get to those areas, there is usually going to be some kind of a reaction. Now, it's important to note that a retracement is not a trend reversal. Okay, a lot of people would consider something like this to be a downtrend. It's not a downtrend. When we look at the daily time frame, this is an uptrend, right? This is an uptrend. Right now we're in the middle of a consolidation period, but overall we have been in this uptrend for quite some time. In fact, we've been in this uptrend since, I would say, March 14th, 2020. March 14th, 2020, we have been in this uptrend. And Fibonacci retracement levels act as support and resistance levels. These are areas of interest when we should look to enter a trade. So how are we going to use the Fibonacci retracement tool? Now, the Fibonacci retracement tool is found over here on the left in TradingView. It's going to be under the pitchfork area right here. Pitchfork, you're going to click the arrow. You're going to come down to Fib retracement. Make sure to star it so that it shows up in your favorite tools that kind of float around TradingView, right? So you can use it right here. And that's where it's found. And the way we're going to use it is we are in an uptrend. We are always going to pull from the swing low to the swing high. In a downtrend, we will always pull from the swing high to the swing low. Now, when you're pulling this, you need to make sure to choose. Either you're going to pull from the wicks to the wicks or from the bodies to the bodies. Never mix the two. Let me show you what I mean. We're going to go ahead and click our Fib retracement tool. And we're going to find a swing low and a swing high of the move. How do we define swing low and swing high? Well, we're going to come over, and I like to put on the line graph. And to find a swing low and a swing high of the move, we're basically going to find the area where it was the lowest point of a retracement, where price makes the V shape, right? The clear bounce. That is going to be our swing low, where price gets this clear bounce down here. And the swing high is just the opposite, where price forms a peak and then gets another drop. Okay, so what we're going to do is we're going to take out our Fib retracement tool. We're going to go from a swing low, and we can do this on any time frame. This is just an example. And I'm going to put back on regular old candles. We're going to go from a swing low here to a swing high up here. And we're going to extend it out to the right. Now, the way I'm doing this again, guys, is I'm taking it, I'm finding the swing low, I'm clicking my mouse on the swing low, and then I'm dragging it up to the swing high. I'm keeping it level with that swing high point, but I'm dragging it out to the right so that I can see into the future. Now, notice something. Notice something very significant. When price gets to these levels, there is a reaction. There's a reaction. We come up, we dump. What's the first thing that happens when we dump? The very first thing that happens is we get a bounce off of this Fibonacci level. Now, these Fibonacci numbers here, the reason these numbers are here, the 0.236, the 0.382, the 0.5, the 0.618, these are actually percentages of the move upward. We're measuring what percent of the initial move the price retraced. So if this is 100% of the move from the swing low to the swing high, we are measuring what percentage of that initial move did price retrace. And when it gets to one of these Fibonacci levels, you will find that it is a very reactive area. Some of the most reactive areas are the 0.382, the 0.5, the 618, and the 786. These four areas are very important areas where inevitably we will find some kind of bounce happening. These are places where we would look for an entry. So if price is coming up, and all of a sudden we start to see it dump, what do? When we start to see it dump, we will pull our fib from the swing low of the move to the swing high of the move. And actually, I wouldn't consider that the swing low. I would consider this here to be the swing low. From the swing low of the move to the swing high of the move. And what we're going to do is we're going to wait. We're going to wait for price to come down to one of these areas. And when it comes down to one of these areas, we will look for a bounce. And look what happens. The first thing that happens is we come down, we get a bounce off the 382. We come back down, we get a bounce off the 0.5. We come up, we come back down, we get another bounce off the 0.5. Notice how these act as levels of support and resistance, right? We come down, we get a bounce off the 0.82, and then what happens? We consolidate for a little on the 0.326. We come down, we get a bounce, and then the 0.326 is acting as our resistance, literally to the exact dollar, our resistance right here before we were finally able to break through it. Now, when you're pulling these levels, it's very important that you either choose to pull them from the body to the body or from the wick to the wick. I prefer to go from wick to wick. Some people will pull their fib from the body of the candle at the bottom to the top of the body. Okay, you can do that. It's preference. Personally, I like to go from wick to wick. Whatever you do, do not mix the two. Don't ever go from the candle bodies, like right here. You see these candle bodies that are closing right here. Don't ever go from the bottom of the candle bodies to the top of the candle wicks. That will not give you an accurate reading. Instead, you either want to choose all wicks or all bodies. Now, in an uptrend, we're going to pull from the swing low to the swing high. In a downtrend, and crypto doesn't have a lot of downtrends, so I'm going to go to I'm going to have to go to a forex chart here and show you a downtrend, because forex is, you know, we have a lot of downtrends in forex. So right here we're in a clear downtrend, and so what we can do is we can take our fib from the swing high to the swing low and see where the retracement will be. So we'll take ours from the swing high to the swing low, and now we're just basically doing it in reverse, where instead of looking for a bounce off of one of these key areas, we're looking for a rejection off of one of these areas. And you can see that, look, we come down, we come up. What's the first thing that we do is we reject off the 0.382. We come down, we reject off the 0.5. You can see very clearly resistance at the 0.382, which is 38.2% of the initial move down, and then again resistance at the 0.5. This is how we would do it in a downtrend. Let me get back to the Bitcoin for crypto on Binance. I'm sorry, Bybit. And so what we're going to do, guys, is when we see price coming up and then we see it dump, okay, we're going to, as soon as we start to see it dump, we're going to pull out our fib. We're just going to whip it out in public. We don't care who sees. We're pulling it out. It's rainbow colored, very flamboyant. We don't care. And when price comes down to one of these levels, we are going to look for a bounce. Okay, we're going to look for a bounce. This will help us find a good entry. And how are we going to find these types of entries? Well, what we're going to do is, and we'll get into this more later in the market cipher session, But we're gonna zoom in when we come down to one of these levels, and we're gonna look at market cipher to determine if we're going to get a bounce or if we are going to fall through it, right? Usually we'll be able to get a bounce. So here's the thing. When we come down to one of these levels after a dump, you can already say, I'm pretty certain we will get a bounce. Look, we dump, we get a small bounce, a nice scalp off the point 236. Literally, you could have scalped this bounce, no problem. Come back down again, nice scalp off the point 382. Come down again, you get a nice trade off the 382. Come down again, we get a bounce off the point 5. Okay, but notice we don't always bounce off of these levels, right? For example, we fall through the 382 here. So how do we know if we're going to get a bounce or fall through? Well, that's where market cipher comes in. I'm going to go ahead and circle this here. And what I want to do is, what is this? This is January 22nd, 2021. I want to go down to a lower time frame. I want to go to January 22nd, 2001. January 22nd, let's go there, 2001. And I need to find our price action. Where were we? This is March. It's not going to load for me, is it? It's not going to load. Come on, in the middle of a course, trading view. In the middle of a course? You're going to do this to me? All right. Let's see if we can get back there this way, the old-fashioned way, guys. We're going to go back in our time machine. Hold tight, hold tight, hold tight, guys. We're in April. Oh, man. I don't even know if this is possible. All right. Forget it, guys. I'll find a more recent example. Find a more recent example for us. Okay. So, how are we going to know if we're going to fall through or get a bounce? What we're going to look for is this. So, we have our let's pull from swing low. Let's just do from this one here. From this swing low, or we're starting to dump now. We could pull it from that swing low to this swing high. Look at that, guys. Look at that. Bounce off the 0.5. Perfect bounce off the 0.5. Perfect bounce. Now, how do we know if we're going to get a bounce or we are not going to get a bounce? How do we know? Hang on, let me get this right. How do we know if we're going to get a bounce or not? Well, what we're going to do is we're going to zoom in on a lower time frame, like let's say the 3 minute. And what we're going to look for is we're going to look to see a divergence and a direction and a money flow cross. The divergence is where price is printing lower lows like this, okay? And momentum is forming higher lows. If you see price is forming lower lows as we're coming down to test one of these Fibonacci levels, and momentum is forming higher lows, okay, that's called that's called a bullish divergence. We'll get into this more later in the course, but just so you're aware of what this is, when price is consistently forming lower lows and momentum on market cipher is forming higher lows, this is a divergence. And when we see price coming down to these areas and we're seeing a divergence form where we're seeing a clear direction in market cipher where we're starting to see the money flow curve to the upside, if we zoom in even more to the 1 minute, we can see even more clearly that we're actually getting a very clear money flow crossover as we're touching down to this level. And we see just such a clear divergence. We see momentum printing higher lows, price is forming lower lows, and we're starting to see money flow crossing into the green right here, right? We see money flow is crossing into the green, comes back down into the purple, and we can tell that money flow is about to cross because, and again, I'll get into this more in the market cipher session, but one thing we're looking for on these lower time frames, because sometimes it can be hard to guess when the money flow is actually going to cross, but if you see that the red money flow is thick and then it gets a little bit thinner and then it comes up and it turns blue for a split second and then it gets even more thinner, this is the direction of the money flow. You can tell that it's crossing over because the money flow is printing higher lows. So when the money flow is printing higher lows, we're getting the bullish divergence, we're coming down to a fib level. That's how you know we're going to get a bounce. And I'm going to get into this more later in the course. So if you don't quite understand it yet, don't worry. You can come back and watch this video after, and I guarantee that you will understand it. But that's how we're going to know that we're going to get a bounce. Now let's talk about how to obtain targets, because this is something that's very important with Fibonacci. Now if we go to the Ethereum chart that I have pulled up, we can see that I actually have these levels marked, my support and resistance levels, as fib extension levels. Fib extension levels. What are these fib extension levels? These are ways to obtain targets using Fibonacci, okay? Because the way it works is this. If we are in an uptrend, okay, going back to Bitcoin, and we go to the daily time frame and we zoom out, if we're in an uptrend, we can actually use the move up and then the percentage of the retracement, and then another move up and the percentage of the retracement to predict where the price is eventually going to get to. Because the trend will continue until it doesn't. So we're assuming that the uptrend will continue because the trend is your friend until the end. Meaning if we're in an uptrend, there's a very good possibility we will maintain the uptrend. And so if we have a move up and a retracement, we can use this data to extrapolate where the price is going to go into the future. Okay? So what we are going to do is, there's a few ways to do it. The first way is we get the initial leg up, then we get the retracement. Once we have established that we're getting a bounce off of the fib level, okay, we have to have a swing low, a swing high, and then the bottom of the retracement, and then a move to the upside. Before we can start to obtain targets, we need to have the initial move, we need to have the full retracement, then we need to have the beginning of the move to the upside. So what we want to see is, we want to see from the swing low to the swing high, and then we want to see a clear, in this case, a clear bounce off the 618 right down here. And once we get this clear bounce off the 618 and things are starting to move upwards again, then we can obtain some targets. One of the ways we can obtain targets is simply by taking the fib, and instead of going from the swing low to the swing high, we're going to pull it from the swing high down to the point where we get the bounce off the retracement. And this is going to help us obtain some targets. This will especially help us obtain some short-term targets. And look at how accurate this is, guys. Look at how accurate it is. I just pulled my fib from the swing high to the swing low, and look at the all-time high of Bitcoin. Look at exactly where we come up to. We come up to this 1.272 level, almost to the exact cent. Okay? And all of these levels we can use as areas of support and resistance. I'm going to remove the first fib just so we can see more clearly. Look at this. From the retracement, we come up and we form a resistance perfectly at the 0.5. And then we come up and look, we get a perfect resistance at the 0.618, which then becomes support, and then we get resistance at the 0.786, and then we come back down and we bounce off the 0.5, resistance again at the 786, flipped into support, and then we come up above the 1-to-1 extension, and it's acting as support again. These levels are respected. So again, the way we're going to obtain targets is we will pull our fib initially from the swing low to the swing high, right? Once we get our bounce, our final bounce, okay? And it's very important that when we're doing this, we're ensuring that the trend is continuing. You can do it from here too. There's lots of different ways to do it. So, but in hindsight, we're going to pull it the second fib. Once we have established that the retracement is over, a lot of ways we can know that the retracement is over is by looking at market cipher. This is very important. If we are printing, let's go to the 4-hour. Okay, if you can see on market cipher that we're printing a bottom and you see very clear direction on market cipher as we're hitting a Fibonacci level, this means we have come to the bottom of the retracement. Okay, almost every time on the 4-hour time frame, if we are printing these big bottoms right here, down here, almost every single time this means we have come to the bottom of the Fibonacci retracement. I would say 9 out of 10 times you see one of these guys, that means we're coming to the bottom of the fib retracement. You see two giant waves below the -60 line on market cipher down here, you can be pretty sure that we're done with the retracement. Just look historically. We print the two waves on the 4-hour below the -60, boom, end of the retracement. We print the two waves below the -60 on the 4-hour, boom, end of the retracement. We print the two waves on the 4-hour, boom, the end of the retracement. Okay, we can be very confident. So when you see we're bottoming out, when you see we're bouncing off one of those fib levels, then you're going to pull your second fib, this time from the swing high of the move to the bottom of the retracement. This will give you some targets, and the first target I always look for, if you're catching a bounce off of a fib level. The first target that I always look for, guys, is right here between the 0.382 and the 0.5, okay? You can pretty much be very certain, maybe 85% of the time, if you are catching a bottom bounce where Market Cipher is giving you 2 waves on the 4-hour. Of course, we can do this on lower time frames as well, guys. But if you see a clear bottom on Market Cipher and you're catching the bounce from the bottom of the retracement, your first take profit could probably 99% of the time be right in between the 382 and the 0.5. You will see most of the time that this is always an area of resistance. Look, we come right up and we find perfect resistance in between the 0.382 and the 0.5. And just to kind of show you guys that this works a lot of the time, let me just go to some other areas, okay? Let's take our fib from, for example, this swing low to this swing high, okay? From that swing low to this swing high, we're getting our bounce and our bottom off of, well, technically, I guess, okay, never mind. This is the same retracement. This is the same Let me go to a different retracement. Sorry about that, guys. Sorry about that. So let's take our fib from this swing low to this swing high up here. We're getting our bounce off the 0.5, right? So then we're going to take our second fib from this high to the exact retracement, and look at this. Look at this again, okay? Look at how accurate this is. We come up, and where's the first place we find resistance? Right between the 0.382 and the 0.5. Exactly between the 0.382 and the 0.5. So if you have confirmed that we've bottomed out on a retracement, we're getting a bounce off a fib level, Market Cipher has printed these 2 deep waves below the 60, okay? Your first target should always be between the 0.382 and the 0.5, okay? And then you can obtain these other targets. You can shoot for these other targets after that. And look at how these targets are respected, right? We come up, perfectly hit the 618. Perfectly hit the 786 as a perfect resistance, perfectly hit the 100%, and then we just missed this one by a hair before we come back and find support on another fib level. And if we just pull this into the future, guys, we can see that these levels tend to just be respected in general, right? Look at this. We come down, we wick down right here, and this is months later, right? This was back in January. Months later in April, when we get a dip, where do we dip down to and find perfect support? At a fib level that we pulled back in January. These levels are definitely respected, guys. Absolutely, 100%, absolutely, positively, napsitutely, scapitutely. I'm telling y'all, Nick. I'm telling y'all. Okay, now, let me, there's other ways to obtain targets. Let me come down to a lower time frame. And we can do this on any time frame, guys. Let's do it on the 1 hour. Okay. Here's a move and a retracement, right? We'll pull our fib from the swing low to the swing high. And you can see that we're getting a bounce off of the 0.382. We're finding perfect support right here on the 382, right? What are we going to do now? Now we're going to pull our second fib from the swing high to the bottom of the retracement. And look at this, guys. Look at this. Where's the first place that we find our target? Perfectly between the 0.382 and the 0.5. In fact, you can see that this exact middle point is acting as resistance, right? We find a candle coming up, wicking up, unable to come through. Then it's acting as support. This will work on any time frame. But there's other ways to obtain targets, guys, and that is called the fib trend-based extension. That's what I was showing you on this Ethereum chart. Right here, these are trend-based extensions, and this is where we can kind of use, right? We can use a leg up, a retracement, and then another kind of leg up in order to obtain targets. So, what do I mean by that? What we're going to do is we're going to come here, we're going to come to trend-based fib extension. We're going to go from a swing low to a swing high, okay? And then we're going to pull it down to another swing low. For this kind of thing, we need to have 2 swing lows and 1 swing high. We need to have 2 swing lows and 1 swing high. We need to have a swing low. We need to have a swing high, and then we need to have a swing low. What this will do is it will use this entire leg and extension to extrapolate where the price is going to go in the future. So we're going to take it from down here, from the swing low to the swing high to the swing low, and we can see that we get these targets. We can get these targets right here. Now look at how these targets, these targets, are respected, okay? We come up after the retracement, and we come up immediately, and we find resistance right here at the 382 extension level. Literally right here, we find resistance at this fib level. Then we come up and we find resistance at this fib level, the 0.5. Then we come up and we don't find perfect resistance. We get a little fake out above it, but we hit a stopping point at the 618 fib extension. Now we extrapolate out farther. Look at this. Look at this. We find perfect resistance and consolidation right here at the 786. Then again, perfect at the 1-to-1 extension. The reason it's called 1-to-1 extension is because this is 100% of the initial move upward. So this is the initial move upward. We have the retracement. When we come up here, this is 100% of that initial move. And then we become over 100%, where now we come to 127%. And you can see that at the 127%, right? We form a perfect resistance, which then gets flipped into perfect support. And right now, our next fib target for Ethereum is right up here around this area at about 35.71 and 15 cents. 35.71 and 15 cents, right around that area. And then our next fib target would be up here at about $3,939, close to a $4,000 Ethereum. And look at this, guys. Look at how these levels are respected. This is how we are able to obtain targets. And again, we can do this on any time frame. The higher the time frame, the easier it will be for you to obtain levels of support and resistance using Fibonacci. The more data that we have to work with, the better. The better. And another way we can tell if we're going to blast through these areas of support or resistance or not is looking at market cipher. Check it out. We come up to the resistance. What's happening on the 4-hour? We're printing a red dot. It means we need to cool down. What happens when we print the green dot? Well, we blast through the resistance. What happens? We come up here. We're printing a red dot. We need to cool down. What's going to happen? We're going to print the green dot on Ethereum, potentially, right? Print the green trigger wave, and we'll be able to blast through this resistance. And it happens here too, right? Where we are able to blast through this resistance when we get a nice tight green trigger wave with lots of momentum upward. This has been a unique situation with Ethereum the past few days, guys, simply because Ethereum has been absolutely insane. Just like the gains have been crazy. I was up in a trade about 200% on Ethereum. Right now, I'm in another trade up 23%. It's been crazy. It's just Ethereum has been nuts, absolutely nuts. But this is probably not the best situation to show you because we're not always going to be in such a massive bull run. But these targets will work. Let's go to another. Let's just go to Litecoin, for example. Here's my Litecoin fib extension, and we can see that. You know, I took it from here. Let's zoom out here and go to the daily time frame. I took this trend-based fib extension from this swing low down here to this swing high up here, and back down to this swing low up here, and look at how it's respected. We're finding resistance perfectly at the 618 right now, perfectly. We found resistance at the 0.5. We found resistance at the 0.382. We came up and we found perfect support at the 0.236. These extension levels work. This is how we were able to obtain targets. And if we're in a bull market like we currently are, and we're in an uptrend, and we're assuming the uptrend continues, then it's not too crazy to assume we could see a Litecoin up at like $924. It is not too crazy because the trend is your friend until the end, meaning the uptrend will continue. Up, retracement, up, retracement, up, retracement, up, retracement, up, retracement, up, retracement. Every time in an uptrend we get another impulse move to the upside, it usually is more significant than the last. And let me show you guys what I mean. If we take a look at the BLX, which is the Bitcoin from its conception, we can see that every time we get one of these impulse waves, it's bigger than it was the last time, right? We can't even see the ones that happened back here, but if we zoom in back here, we can see that we were actually having massive moves, massive waves up back in the early days of Bitcoin, right? We have an impulse wave up, and we come down a little bit. We have an impulse wave up, and we come, the impulse wave up, and then we come down a little bit. Then we have another wave up, whoa, 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 and then we come down, and they become more pronounced over time, right? They become more pronounced over time, you know. So back here, way back here, when oh man, I'm sorry guys, when we were having this massive Bitcoin rally back in the day, right here, where Bitcoin was like going from cents all the way up to $31, we can't even see this wave now, right? But back then, this looked super intense. And we've technically been in a Bitcoin uptrend since this time, right? So every single time we get another wave and consolidation, the wave is more pronounced. So if we're in a bull market, like we are right now, and we go back to Litecoin, we can see that, you know, each time we get one of these moves to the upside, it's bigger than the previous move until the bull market is over. So, you know, right now our next level to reach is probably, I'm expecting, you know, the 370 level before we get another significant retracement down, because that would give us, you know, continuing a higher high, higher low, higher high, higher low. And so that is how we are going to use Fibonacci to find bounces and to obtain targets. Now, I'm going to get into this more later in the course, but we can also use these levels as very, very good entries for a trade. Because something that I think is important and often overlooked is the fact that part of being a good trader is finding a good entry. Just because we're in an uptrend doesn't mean you want to long. We want to long at an area where we can put a stop loss, where our trade becomes invalidated if the price goes below there. Like right now, if we're in an uptrend and I have no levels to base my trades off of, how would I know where to put my stop loss? How would I know if I don't have any levels of support? The only logical place to put a stop loss would be below the last swing low all the way down here. That would be horrible, horrible, horrible risk management, because you're potentially risking all this in order to gain an unknown amount. If we have our fib levels, then we can say if price retraces down to here and gets a bounce, I can enter a long position right here as soon as we get the bounce from the support. I can put my stop loss below the support and set my take profits at the next Fibonacci levels. And the reason you can do this safely without having to be worried about getting stopped out is because the trend is printing higher highs, higher lows, higher highs. We've come down, we've gotten a bounce off of a Fibonacci level. If we're bouncing off the Fibonacci level, you can say to yourself, okay, we're bouncing off the level in the uptrend. If price doesn't bounce and instead goes like this, then I know I'm wrong in my plan. My plan, and we'll get into this later in the course, is that I'm going to long the bounce. If we don't get the bounce, you get out of your trade with a very small loss of 2%. But if you're right that we're getting the bounce, well, what happens? Well, we end up so far in this trade, you're up about 19%. And so these Fibonacci levels will allow us to find those really, really good entries. We can use a combination of these levels along with other support and resistance that we draw by hand, along with market cipher, to find really, really good entries. Again, if we take our fib retracement from the swing low to the swing high, what happens here? You could say that we are pull it from the swing low to the swing high. You know, potentially you could say that we're getting the bounce off of the 618 while we're also starting to print. Let me go to the 4 hour. While we are also printing on the 4 hour this double bottom right here, right? We're also consolidating right here on the 618. So you can use this once we come above the 618 to enter your trade. In this case, when we get the bounce off the 618, you enter right here. You put your stop loss, I would say, below this. This orange line is a I think it's a high volume area. We'll get into that later. But this yellow line here is a weekly support. So put your stop loss below the weekly support, and then you set your targets up at these fib extension levels. This is a good trade entry. And the way we're doing it, we're using market cipher, we're using Fibonacci levels, and that's pretty much it, guys. So this is how we are going to obtain targets using the Fibonacci. The opposite is true in a downtrend, right? I've been showing you a lot of uptrends. Let's prepare for the bull market. We're going to do the Euro USD on Forex. Let's do Onada here. Okay, so let's say we are in the downtrend. What we would do is we would pull our fib from the swing high to the swing low. And then we would wait, and once we see that we are getting the rejection off the Fibonacci level, with simultaneously market cipher printing the red dot, okay, market cipher is printing the red dot as we are getting the rejection. Then what we do to obtain our target is we take our fib from the swing low to the swing high. This will give us our targets. And just look at how these levels are respected. We come down, we immediately form a support here, then we form a support here. And again, the same is true. My first target would always be between, if you're doing it this way, between the 0.5, between the 382 and the 0.5, which is right here. And you can see that we do get a nice sticking point in there. The second way to do it is to use your fib trend-based extension to set your targets, where we go from, in the downtrend, from the swing high to the swing low to the bottom of the retracement, and we can set some of our targets this way. And again, look at how these targets are just respected. And if we zoom out and we pull this thing more down like this, what do we notice? We notice that we actually come down perfectly to the 1.618 extension. And these levels are respected. We find perfect support right here at the 0.786, perfect support right here at the 1-to-1. We come back, we get a rejection off the 0.5, come back down, rejection off the 0.5 again, come back down, get a perfect bounce off the 1-to-1. This is just, in the middle. We don't always hit the levels, but then look, we come down, form a perfect support at the 1.272, perfect support at the 1.618. And these levels are just respected. We can pull this thing all the way over here and see that even just these little moves in the price, right? Consolidation in between the fib levels that we pulled a long time ago. So this is something that you can play around with. We can use our fib like on any time frame, really any time frame, even in small areas where, like, let's say that we're in this short-term downtrend on the 1 hour. You can even just pull out your trend-based fib extension, go from swing high, swing low, swing high, and set some targets this way. And look, it's respected. It's just respected. Play around with it, guys. There's a lot of different things you can learn about this. A lot of different things you can learn about it. I'm sure that you will find a lot on the internet about this. I already did my examples. I already did fib extensions using confluence. This is important, guys. You never want to trade fib levels alone. You must find confluence between other indicators. So if I go to my Bitcoin chart here and I come to this one here, okay, we can see that here. Let me turn off this this long position here that I'm in here. Let me turn this off. This is a swing trade that I'm currently in, which honestly, guys, is in the red. This is a Bitcoin scalp that I'm in right now. I've already taken a lot of profit out of all three of these trades, just kind of letting them ride. But yeah, I have some plans for this. This is my stop loss, which would invalidate the trade because it would come down below this swing low right here. But anyway, I digress. Let me turn off this long position here. And what we want to do, along with our fib levels, guys, is we want to use weekly and daily support and resistance levels. We want to use moving averages as well, and we want to use market cipher. So right here, these are daily and weekly support and resistance levels that I have marked out. And if we find that one of the fib levels gives us confluence with one of these levels of daily support and resistance, we know it's an extra strong level. So let's just pull out our fib extension. Let's take it from the swing low to the swing high here. And what do we notice? Well, we notice that this area right here, this daily support of $54,000 is also our 0.382, right? So this is a very significant level. If we lose this level, then we're coming down to this level, and then we're coming down to the 618 level. And what do you know? The 618 level is perfectly aligned with our daily support at 51.6K. If we find confluence between hand-drawn support and resistance horizontal levels and Fibonacci levels, we know that that is a very, very strong area of support and resistance. If we find confluence between, let's turn back on Market Cipher A, the moving averages, and one of these Fibonacci levels, that's a very strong area of support and resistance. So right now, if price were to come up here quickly in this purple candle, if it turns blue and shoots up to this Fibonacci level, this is a Fibonacci retracement level, and it is also the 21 EMA and the 55 EMA, a very strong area of resistance. Another thing we can use is volume. Okay, so if we see that we have an area of very high volume, sorry about that, guys, an area of very high volume, for example, right in this zone here, we also have an area of very high volume node right here, right? We can see a very high volume node. In fact, if we just are looking at this price action, we can see that the highest volume traded is right here exactly on the 382, the daily support that we drew by hand, and this this high volume area all in one. This is a triple area of support and resistance. This is a very significant area. This is an area where we should be looking for a reaction. Right now, my make it or break it moment is this 4-hour candle going to close above this zone or below it? If we close below this zone and we're unable to hold this strong support, then I'm looking for these lower levels. If we are able to close above it, then I'm looking for these higher levels. I'm going to be using Market Cipher to give me confluence here. I'm going to be using Market Cipher to give me confluence because I see that we're about to print a green dot on the 4-hour time frame. I see that we printed a double bottom. Okay, we are printing consecutively higher waves. We are seeing the money flow crossing from the red into the green. The VWAP is about to cross over the 0 line. We're about to print a dot, a green dot on the 4-hour. All things being considered, that's why I am still long, because I'm using all these things together. I'm saying we're consolidating at a triple significant level of support and resistance. If we are able to come up here with the momentum that Market Cipher will show us, it's very possible, very, very possible, as we're printing this bottom on the 2-hour, that we come up above here and see higher levels. So really, when we're looking at trades, we want to find as much confluence as possible. We want to find as many reasons as possible to decide to trade one way or another. We're going to be using moving averages. We're going to be using volume. We're going to be using support and resistance. And we're going to be using Fibonacci. So that's pretty much it for the Fibonacci, guys. I hope that y'all found this video helpful. And I will see you guys in the next session.